All right, we're getting ISM services right now.
10 seconds.
Pause the music for the squawk.
53 spot 4, 53 spot 4, higher than forecast of 52. Prices paid at 64, 64 on the prior 57 spot 4. New orders at 55, 55 on the prior 52 spot 8. And employment at 50 spot 5, 50 spot 5 on the prior 43 spot 3. So looking to the markets here, strength in the dollar, weakness in the S&P 500. Again, services PMI hotter than expected. 52.5, cooler than the forecast 52.9, with the breakdowns again hotter than expected.
All right. So S&P ain't holding up on this print. Probably because that means, yeah. So here's what's happened. So this ISM services forecast was 52, prior was 50.5. The actual came out at 53.4. That means you could potentially see an acceleration or a holding of services inflation, which is the primary component of inflation that the FOMC at their last meeting said that they were watching and that they wanted to actually see come down. So the ISM.
The treasuries as well extending their slide after ISM services gauge topping estimates.
Yeah, that means yields are increasing. The treasuries are sliding. Kind of got my stuff. We'll be pulling up some research on the RBA today and probably some tweets on expectations for SLOOs, which is the Senior Loan Officer Opinion Survey from, actually, I think I'm pretty sure it's a central bank, right? Yeah, pretty much I looked at the time, I'm like, oh, I should probably start streaming right now. So, just a bit disorganized. Just a little disorganized. Don't worry.
We have posted out the US ISM services PMI January report on the feed for anybody interested.
I sure am. Let's go ahead and check that out.
Report notes that 10 industries reported growth in the January services PMI by being above 50 again for the 13th consecutive month after a single month of contraction in December of 2022 and a prior 30-month period of expansion, continuing to indicate sustained growth and at a faster rate in January for the services sector.
One sec, I'm just pulling up. Just pulling up the screen. That's not what I want. Yeah. Well, for now, we can do this. Let's see. We just want to get straight to the table. Okay. Prices. Whoa, prices went higher. Here, I'm going to go ahead and mute that. those little beings are my email. I'm getting a bunch of
Fed Scoresby
emails.
repeats he doesn't want to rule out a March cut.
Okay. Prices increasing, inventories contracting. That actually could make prices actually have some pretty serious momentum here. Prices have been apparently increasing for 80 months now.
Goolsby says we need to see more data showing inflation progress.
Yeah, Goolsby here is saying what I was mentioning in yesterday's stream. You can't totally rule out a March cut. It really depends on how inflation actually prints, especially on the services side. All right, let's go back to the charts. Well, looks like that dip got bought. Pretty much a straight sideways day today. Nothing crazy here in the US markets. Okay. Still getting organized off the screen with a couple of things here. Let's see. Shenzhen. Yeah. This is China's stock market. We'll go ahead and
Fed Scoresby says I won't speculate on a potential for a 50 basis points cut.
What? Where did that come from? Okay, Goolsby, don't. Hey, that's market manipulation. Come on, you're just saying that to try and profit off the stock. That's so wildly out of consensus. I won't speculate on a potential 50 basis point rate cut. We're like, well, we've never thought about you ever doing a 50 basis. Like, there's a 0% probability of you doing it. It's just a way of sticking the idea into people's heads. Anyways, yeah, this has been, oh god, this, oh my god, it's just going exponentially down. Oh my god, it's like a 50% drawdown here from the high. That is insane. China is getting their stuff kicked in right now. Let's see. Can I get some news on the SLOOs? Let's pull up NQ in the meantime. NQ holding steady on the day. Whole lot of nothing. The dollar, though, check that out. Wait, this was my forecast from yesterday. We've already hit the damn target. Wow. Euro got hit. Hard. Hard, hard, hard. But now this is a low probability zone for finding a low on the month on euro dollar. So thinking we go lower. Yeah, there's probably another 70-ish pips in that ride here. See if we can get these things to. Yeah. Sometimes when these indicators are being used during peak hours on TradingView, sometimes they don't load. But good thing is you can just switch the indicator and it'll just load instantly still. So yeah, on the week, it's also a bit lower. Yeah, we're probably gonna see 107 here on the euro. And the Aussie is heading towards these lines I drew in the
Fed
trading.
Scoresby says strong jobs data doesn't necessarily mean overheating.
Yeah, you can always say that. Yeah, you can always say that. Let's see here. That's the calendar, hot list. Wow, Tesla. Tesla. Down 4% today. And by the way, this indicator here is something built in from TradingView called analyst targets.
Fed Scoresby says inverted yield curve as a rule of thumb is not applicable as a recession indicator.
So the way to read this is the maximum forecasted price a year out. This is the minimum forecasted price a year out from real analysts and recommendations. This orange line here, I believe, is the median, and this gray line here, I believe, is the average. Yeah. I'm gonna play around with this information here and probably make some cool stuff out of it. But you can clearly see between the maximum and the average, the bears are very bearish. It'd be nice if you could get information on everyone's forecast a year out, because it's one thing if you have forecasts kind of mostly around the average here, and then it gets thin, and then you got this guy down here. So you got the handful, 2, 3, 4, 5 group of people who are like, oh, this thing's going down to zero by 2025, January 2025, in a year from now. But still, most forecasts expect sideways, right? So it'd be useful if we could get more data points out of this, but nope, it just gives you the minimum, the maximum, the average, the median, and the number of people who were making forecasts. So not the most information dense bit of, you could say, just information, period. but this can probably still be used in something. Let's check out. Oh, NVIDIA is gapping up right now. NVIDIA's up 3.3%.
Goolsby says, I've seen decidedly tighter lending markets over the last year.
Let's see here. Google rebounding right now. Strong day like yesterday. Meta currently holding this gap higher from yesterday. Meta had an insane move yesterday. It went essentially from $400 to $460. Absolutely nutty. And it almost went to 500. It was how many off from 500? It was about 15, 14 bucks off from going to $500. Absolutely crazy. Uranium is doing pretty good today. Actually, no, not today, but the overall trend. I was just watching some commentary talking about like, hey, since 2023, this has been a 60% gain. Yeah, uranium. I'm watching my inbox right now, my email inbox for any RBA commentary that I can add to the stream here. Let's see. When foreign geopolitical risk rises, bank impacts can hit close to home. Yeah. I'm just going through some emails here real quick to see if I can find some RBA stuff. The pricing of the first full easing has been pushed from June to August, and pricing for December reduced from minus 53 basis points. Oh, to minus 53 basis points to from minus 67. Okay, so there's only two rate cuts priced in by the end of the year here for the RBA, and the first rate cut got pushed out to August. Great. So they'll probably be on hold. Okay. Let's see here. BOJ analysis, Eurozone analysis. Some good outlooks coming out today. Some Japanese week ahead stuff. A lot of Asian analysis is getting out. The president of Salvador got reelected.
US stocks extend fall, Dow Jones down 1%.
Oh, let's go check out the Dow Jones. Yeesh. But you know what? That's still a fairly nominal move for this series of data.
Taking a look at the Fear and Greed Index, 74 out of 100 equaling greed, and the Crypto Fear and Greed Index, 60 out of 100 also equaling greed. And taking a look at the VIX, currently at 14.42. Eurozone bond yields extend rise. Germany's 10-year bond yield up 9.7 basis points, last at 2.326%.
Yeah, Bitcoin isn't going crazy at the moment. It's just chilling. Wow. Yeah, when he started talking about UK bond yields, I'm like, oh, probably good to probably check out the yield spreads here. Wow. So the short-term yield spreads and intermediate-term yield spreads are kind of flipping here from the 1 to sort of the 5-year, but mostly the 3 to the 1 year. So these little hamburger plots are just showing how the yield spreads are changing over time on pound dollar. This is kind of a mixed look here. These orange spots, but all this green here, this is what the yield spread has been doing. Yeah, so I don't know. Yields are still moving pretty well in favor of the pound. So something else is moving the Great British Pound today. It's not the yields. This is, 200 pip move. Just so far in the last 2 days. I mean, don't get me wrong. The dollar has been getting stronger, but if you compare these spreads to something like Australia, like you can see that's not as good. And then the EU also probably not as good, right? Come on. There we go. Yeah, you can see very, very mixed results. Actually, this is significantly more bearish on the short term today. So a lot of mixed results. Pretty bearish on that 3-year. That 3-year is really bad. And sort of with that 30-year, that 3 and the 30. And arguably the 20. Yeah, but it's mostly the 3 and the 30 here that are doing pretty bad here on the euro. How about New Zealand? How's New Zealand holding up? Yeah, they got positive yield spreads. They're kind of, they're holding in there. Their yield spreads only on the short term here in the last 3 days have plummeted pretty negatively. Yeah. Interesting to see how the yields either can or don't or are not the cause of XYZ move. Alrighty. Gold. Damn. Well, we were right on the direction here. Gold did move lower. I'll check that out. It went a bit further. Oh, that's nice. Quite nice indeed. Probably still a non-zero chance that you're able to find another low around here. Otherwise, we're probably going to end up going to a 4-hour chart here, getting our daily ranges, finding probably a low for next trading session. Yeah. Well, maybe the low does show up in time that we're expecting it. So direction in time, but not the magnitude we were expecting. Kind of just expecting the thing to go down a bit and then bounce up. But now this has moved much faster, much sooner than we expected. So hopefully we get something that looks a bit more like this. All right. Something along those lines. Slap that down here. probably going to be a bit more of a stop necessary there. Yeah. Probably going to need your entry somewhere around this spot. Sometime over the next couple of days. What does the seasonality say? Oh, what the next 2 days are in store for us. Just waiting on the indicator to load. Oh yeah, we can turn on the music. Okay. And no seasonality. Somewhat bullish expected value on that day went to green day. And this is, so this 6th trading day of February is probably going to be the thing. So yeah, next 2 days, somewhere here or here, grabbing a low. And then that 6th trading day, if that day is not green, it's probably gonna keep going. Yeah. And I don't know, that'd be a nominal expectation, in my opinion. Oh yeah, that's right. We had this whole little setup of this thing on the high side. Right up here. Yeah. Oh, we're currently trading at the probability weighted pivot for the month. Lots of your lows show up in this area between 2040 and 2000 for the month of February. And check that out, quite a lot of lows show up. So maybe you get one more day, you get your bottom wick in there, sideways day, and then a pop. And that could be 1 or 2 days off, but I'd probably expect a more volatile reversal, at least going into next week. And if that isn't the case, then setting expectations for a move down to call it the 1990s here seems pretty likely. So let's set up an alert for that as a just in case. And then it'd be something like this. Let's see. Trading scenario. Yeah, a lot of your closes are pretty bearishly skewed over the short term. And over the long term, yeah, they are more nominally skewed to here. I'll leave this on. I mean, don't get me wrong. This is more biased towards the short term data here. However, this other set of 2 indicators that use the high and the low, these are also using the auto look back, all the historical data. So, with that in mind, let's just be consistent. One more thing here. Cones, because these are using closing data, right? Yeah. I would assume that we close above 2000. That's a pretty conservative estimate, unless something particularly horrid goes wrong. Alright, let's see. Anything else to check out here? Oh, let's check out Bitcoin. Again, nice positive skew. So I got our closing odds. Wow, check that out. 50% of your lows this month occur in this spot here. Yeah, I'm not expecting that we could trade below 4,000. Yeah, check that out. It's like 40% of your highs this month are in the 48 to 40 or 54K range, this area. Yeah, based off this, I have quite bullish expectations. Study error. Oh, it's just a timeout. Yeah, and you can see it's definitely the cards. I don't know if this cone is a decent estimate on Bitcoin though. If I could get these cones to be Cauchy distributed, that'd be better. Let's try absolute. Oh, absolute's actually much worse. The median value is giving you a negative drift here. Yeah, nutty. Well, non-zero chance at the highs in. All right. Let's check out oil. Oil. Again, I got bullish expectations on oil. I think that the bearishness on oil is a bit exaggerated right now, don't get me wrong. A lot of the concerns are valid concerns, but I am... Oh, wait a second. Looks like it hit that entry spot. Yeah, pinpoint hit it.
So, commentary from Italy's economy minister says we have signs of modest economic recovery in the last quarter of 2023 and beginning of this year, above the European average, he notes.
All right.
The Bank of Canada Q4 Market Participants Survey notes that the median forecast is for a rate cut in April, the same as the Q3 survey.
Yeah. Nice call, Joe. Nice call on Zeal. We'll see if it gets past this spot here. If it does, then it's kind of gambling, figuring out where to buy here. It's mostly you let it fall as much as you can, and then as soon as it starts rebounding and creating a wick, as soon as it starts rebounding, you get reactive, and you buy on the reactive move higher. And today's candle's not done. You still got 6 hours, so you could still be trading down in this spot here. Still quite a bit of risk here. Yep. Still got my bullish expectations on oil. It's kind of a counter trend or contrarian expectation for sure. Net gas. How's net gas hold? Man, my my moving average is taking longer to load than my probability indicators. Trading view is kind of slow. What's the seasonality? Yeah, it's really bad. That is really bad. Bearish seasonality here for the next today and the next 3 trading days, and then got a break here on the 7th, 2 more bearish seasonal trading days, some chop here, and then more chop here. But then this 19th trading day is especially bearish. Yeesh. All right, let's see if we can figure out an end of month closing expectation. I'd say no. These probability pivots are a bit wide. I think the low is probably below $2. And then you go back up to here. But this is literally a guess. This is not even... $5. This is the actually this is end of month, so all right. High odds, low odds. Most of the time you don't go that much. How about on the week? I mean, you do have these spots here. See here, this is the quarterly range. It says that the low for the first quarter here could be inbound around here. I'm starting to change my mind. Yeah, let's do something like this. Still a bit lower. Still a bit lower, but yeah, up like that into the end of the month. Let's go ahead. Let's see here. How should we manage this? Probably along those lines there on the stop. Yeah, that looks good to me. All right, let me go and check my inbox and see if I got some RBA news. And I'm specifically focusing on RBA, not just because, you know, it's FX and I primarily do FX stuff. But if you look at the economic calendar, we have RBA interest rate decision. Semi-annual foreign exchange turnover by RBA. Economists expect the RBA to hold rates. B of A expect modest changes to guidance. They believe the RBA will likely dial down their hawkish stance. We'll go ahead and make sure to mute that tab. Let's see. Yeah, first cut isn't priced until the meeting on the 6th of August. And even then, the next two meetings are probably getting skipped based on the current pricing. September and November are skipped, and then they cut again in December. So this is very, very conservative pricing for the RBA rate path here. That's actually everything. I thought I sent a lot more on the RBA. I guess people are just like, well, they're not cut. They're going to be holding. And in the meantime, we keep making new lows here. New lows on this Aussie pair. Wonder where we are at on the cones. Oh, wow. Well, looks like we're adding, I think, the pivot point stop loss. So now we have definitely strong. Let's see here. Oh, an Aussie dollar. All right. Yeah, so it looks like we're going to be hitting those monthly, weekly targets. Quick and fast into the beginning of February, and then we'll end up rebounding into the rest of February. I'm going to turn up the music just a hair. There we go. All right. Let's see. I'll take requests for the next 5 minutes, whatever chart you want me to look at. Because all the trading for the day is pretty much done. Tomorrow, we probably actually see some changes in positions. Sometime tomorrow, we'll probably be trading around these spots here, maybe over the next couple of days here. So let's see here. So for the rest of today on Monday, Tuesday, so Wednesday's Friday. Either Wednesday, actually, no, it's gotta be Wednesday, London. Yeah, so Wednesday's gonna be the rebound in the latter half of Tuesday night here in America. Let's see, maybe I have some information on SLOOs.
A US Special Envoy for Yemen is to travel to the Gulf this week. The envoy to discuss de-escalation and stopping Houthi attacks.
Oh, that's nice. Okay, from Yard and I research. Let's see here. SLOOs, it's likely to show that leading or lending conditions have eased a bit for commercial and industrial loans and home mortgages, but tightened for consumer and commercial credit. And real estate loans, commercial real estate loans. Let's see here. Anything else? No, that's, wow, that's the only thing SLOOs related I got in my inbox. That's insane. I'm gonna go to Twitter. Let's see here. Latest. There we go. I just had to find the right keyword. No one does it under SLOO as like hashtag SLOO or whatever.
Euro dollar drops as much as spot 6% to the lowest since around November 14th.
Let's check that out. Yeah, you can see spot 5.7. It's probably gonna. It's for 0.7, 0.25 lower. MUFG says dollar buying momentum is increasing and we expect the dollar to strengthen further through Q1.
The dollar index at a fresh 4-week high. And this is while the S&P 500 is extending its declines as well to around 0.65%.
I'd be surprised if we continued moving higher today, but remember what I said in the stream from literally yesterday. Once you kind of cross these, you're likely to find your
analysts
high.
are noting that Wall Street traders sent both stocks and bonds lower today after hotter than expected economic data and signals that the Federal Reserve isn't ready to call victory over inflation just yet. So treasuries came under renewed pressure with the 2-year yields heading towards their highest levels this year. The Fed swaps almost wiped out the odds of a March interest rate move, and the chances of a May cut have also been reduced as well. So the dollar was on track for its strongest day since November, while the S&P 500 lost steam after closing at a record on Friday.
Oh, that's all useful. No, you're likely to find your high for the month on dollar in this spot here, but going past this 104.9, 104 or 105 spot, like you're starting to play dice with going way higher, like an ice skating rink high, volatility select high. And you can kind of see that here with the probability gap. Here's a peak. Here's another smaller peak. And then here's your trough. And this trough is your probability gap. You can use this as a threshold. So then when price crosses the threshold into this low probability zone, you have a nominal expectation that you go to the next most likely area, which would be around this threshold. So you quote unquote gap to the next highest probability gap. That's how I do stuff. I've been trading that for 3 or 4 years now. Definitely doesn't always work. There's a win-loss ratio to it. But because I know what my probabilities are ahead of time and where those thresholds are ahead of time, I just make sure I don't go all in on every trade or risk 1% per trade. And that I stay on top with knowing what I have to know about the markets, reading the news, listening to commentary, and commentary from smart people, not like random people on YouTube who just say, "Oh man, this is going to be the best trading strategy ever." Yeah, we know the types. Let's see. Have I got anything cool in my inbox? Just more analysis on central bank expectations. Oh, market participants survey from the Bank of Canada just got released. All right, we're gonna go ahead and check this out. That's right. There we go. So this is from the Bank of Canada. This was just released market participant survey. So you combine this with SLOOs and you get a general view of how North America sentiment is. Median response, GDP Canada's growth. End of year 24, end of year 25. Okay, so much better expectations for 2025. This is actually really bad for this year. At least there's a bit of a skew to the upside. It seems. No, really. No. It's kind of, no, it's symmetric. Turn that music down just a tad. So. Yeah, there we go. What's the forecast for real GDP? What's the probability of real GDP growth? Each of the following ranges. All right. So the highest probability is between 0 and 1%. And then the highest probability for 2025 is between 1 and 2%. And there's a decent shot of between 1 and 2%, and also a fairly decent shot of going below 0%. So Canada has a little more than a 1 in 5 chance of actually having negative GDP. That'd be terrible. Please identify up to 3 upside risks to your growth outlook for Canada. Looser monetary policy is number 1. Stronger housing markets, number 2. Easing of financial conditions, that's kind of in line with looser monetary policy. Larger than expected fiscal stimulus. Okay, there's a high probability there. Maybe we need to go ahead and check out some news. Maybe in some of the betting markets, Poly market and whatnot, Kalash, and see what the odds are of this. Exactly. See if there's any funding bills, any stimulus bills that are currently being debated in, I believe it's the Canadian Parliament, right? They call it Parliament? No? The legislature for Canada. Let's check what they're voting on. Because 44% is actually reasonably high for a political issue like that. All right, please identify up to 3 downside risks to your growth outlook for Canada.
Dollar
Whoa.
yen rises 0.3% to 148.84, the highest since November 27th.
Didn't quite catch that. Nice. No output gap. Current GDP is equal to potential GDP. So that actually would be a downside. Potential. Right? How would you care? Yeah. No, actually, no, that's down here. That's under a different question. Please identify up to 3 downside risks. Okay. Weaker housing market, tightening of financial conditions are both fairly equal. Then lower commodity prices actually be quite significant. How would you characterize the current level of Canadian GDP relative to potential output? So they actually say there's no output gap, 50%, negative output gap, quite significant. So if you either think there's no output gap or there is a gap, if you think there is a gap, you're likely to think that there's a negative gap. So this is quite bearish, bias leaning. What's the probability, at least bearish bias leaning, Canadian GDP? What's the probability of the Canadian economy being in a recession in each of the following individual time frames? So in the next 6 months, median response is 48%. 50-50. Oh man. In the latter half of the year and the second half, it's 40%. Okay, then it drops. So they think that if there's a recession coming in Canada, it's going to come in the next 6 months, sometime during the first half of this year. What's your forecast for annual total CPI inflation? 2%, 2%, 2%, and slightly disinflationary. Right? 2%. What's the probability of annual total CPI inflation in Canada being in each of the following ranges? So between 2 and 3% is the greatest probability for this year, 2025. All right, monetary policy. What is your forecast for the BOC policy interest rate? So median response in January is 5, 5. Okay, so April there's a cut, July there's a cut, September and October there's a cut. So it goes cut, hold, cut, cut, cut. Or just cut, cut, cut here. That's a hold, that's a hold. So they're going to hold it into 4%. That's the median expectation. The bottom 25th percentile says they're going to go cut, cut, cut. They're going to cut at every meeting, essentially. And this upper one is, what's that? Is that like a half? A half? What's that? A 12%? That's okay. That's interesting. A half a cut. A 12.5%. Okay. That's interesting. Does the Bank of Canada have a history of doing 12.5% cuts that I'm not aware of? Let's see. And then 2025 expectation is 3.5 to 3% cash rate. All right. How would you describe the balance risks around your forecast for the Bank of Canada? Skewed to the lower path or balanced. So generally speaking, confidence is in line with the median or the 25th percentile. So somewhere between these two values is probably where the consensus lies. So this might be too conservative, and this might be too aggressive. Yeah, so maybe they cut one of these meetings or not one of these meetings. We'll see. At what level do you expect the policy rate to peak in the current cycle in Canada? They expect it to peak at 5. Gotcha. What is your estimate for the long-term nominal neutral rate? So median is 2.5, low is 2.5. Yeah, so 2.5. And here are the bonds. Bonds. Gotcha. Actually, that would be useful for me to read here. Median, yeah, that's a skew lower. That's about equal. So the 2-year has a skew lower. Oh, median prices for WTI, $80. That's the estimate by end of 2024, $80. And then the high end is 84 and the low end is 73. So there's actually a skew, it seems, to the lower end on oil. Oh, check this out. Canadian dollar forecast. End of year 75. End of year lower 25th percentile is 73. And then 77. All right, let's check out USD CAD. Oh, wow, check that out. Dollar got much stronger here. Wow, the pound just got hit so hard. Wow. That is terrible. Ah, man, but that looks so juicy. Yeah, I'll take a shot. Alrighty. We want USD CAD because we just looked at the USD CAD analysis. Yeah, this thing's still going to go a bit higher. If we do 1 minus, and hit enter. Oh, actually, we want this minus 1. No, I need a reciprocal. So what was the forecast by end of year? So the 25th percentile by end of year was 73, median was 75, 75 was 77. So we are already not that far from 73. This is already the low end of the forecast here. So I'm pretty certain 73 is what, here? A little bit past that. No, that'd be here. Yeah, this would be 73. All right, let's put in a line there. Somewhere around here.
And so some commentary from Wells Fargo on the ISM services print we did see this morning. So they note the prices paid component stole the spotlight in today's ISM services report, posting the largest monthly percentage gain since 2012. So they do note that as a diffusion index, it's measuring breadth, not magnitude, but it is still hardly supporting the case for rate cuts.
All right. Go ahead and call it here. As far as the stream goes, pretty much I'm done trading. Did a little bit of analysis. I am going to be waiting on SLOOs, and I'll be giving my commentary on that in the Discord when that finally comes out. Alrighty. I'll go ahead and say thank you guys for watching. And I'll see you guys in a bit.
And Linda says Germany needs a more flexible labour market.